Ever pondered over what happens behind the closed doors of a Federal Reserve meeting? Today, we dive into the intricate details of the most recent one, unfolding the chronology, decisions, and implications. Picture this. The date is December 12th, 2023. In the heart of Washington, D.C., a group of the most influential policymakers gather. The Federal Reserve's Federal Open Market Committee, or FOMC, commences its final meeting of the year. The day starts with a review of economic and financial conditions. The committee scrutinizes the global scenario, assessing the performance of various economies. The discussion drifts towards the domestic front, weighing the health of the U.S. economy. The inflation rates, job market trends, and consumer spending patterns are all put under the microscope. Then comes the monetary policy discussion. The debate intensifies. Some argue for a more aggressive approach, citing increasing inflationary pressures. Others caution against hasty decisions, pointing out potential risks to the economic recovery. The air is thick with anticipation. Finally, the decision-making moment arrives. The committee agrees to raise the federal funds rate by 0.25 percentage point. It's a bold move, signaling the Fed's commitment to containing inflation, even if it means a possible slowdown in economic growth. This landmark decision, however, is not taken lightly. The committee also decides to accelerate the tapering of its bond buying program, a step towards normalizing monetary policy. The meeting concludes with a press conference. The Fed chair, in a calm and composed manner, communicates the decisions to the world. The message is clear. The Fed is ready to face the inflation challenge head-on, even if it means making some tough decisions. So, what have we unraveled today? We've walked through the chronology of a Fed meeting, from the initial economic review to the final decisions and their announcement. We've seen how the committee grapples with complex economic issues, making decisions that impact not just the U.S. but the global economy. The key takeaway is the Fed's determination to combat inflation, evident in its decision to raise the interest rate and accelerate the tapering of its bond buying program. These decisions underscore the Fed's commitment to its dual mandate of maximum employment and stable prices. Indeed, behind the closed doors of a Fed meeting, the wheels of the economy are set in motion. Each decision, each discussion has far-reaching implications. It's a fascinating world, one that we'll continue to explore in our future discussions. Until then, keep pondering, keep questioning, and most importantly, stay curious.